So you want to learn about order types? Welcome on into today's video. We're going to be talking about the order types available on Robinhood, what they mean, how to use them, and when you may want to be using them in your own trading or investing journey. All right, so here we are inside of the Robinhood platform, and what I'm looking at right now is SoFi, and it's defaulting on the right-hand side to a buy order. Now, if you click on this little information button, here's what they say. They claim that the default dollar and share orders, which is what we're sitting at right now, a buy order, just default, are market orders or limit orders. Kind of weird, market or limit. Why can't it just be pick one, right? This type of limit order is designed to execute at the same price and speed as market orders, but can only execute at the limit price or better. So you would think that's actually pretty good. Now, I'll explain what that means in a second, but in a nutshell, a market order, there's a bid and an ask. So there are people who are bidding to buy a stock at a certain price, and there are people who are asking to sell at a certain price. And usually on heavily traded stocks, that's pretty tight. And so SoFi, I would imagine the bid is probably around 12.16, and the ask is 12.17 or 12.18, somewhere in that ballpark, within a cent or two. Not really a big deal. When you're looking at larger price stocks, the bid and ask spread can be larger, just because the stock's price is larger, and what the percentage difference of 1 cent might not make a big difference. And it's really going to be kind of a similar story. Now, if there's very thinly traded stocks, meaning there's not a lot of volume on a given stock on a given day, that's where spreads can be kind of larger, and you might want to be careful with that. But Robinhood doesn't really give you a great visual on that unless you click on the advanced button right here and you go to the advanced charts. Now you might get a bit more of kind of like some information about price action, recent price action. You can also pull up level 2 market data. Now I'm going to add this right here so I can pull up the order book. And what's going to show me is the difference of the spread. So on the right-hand side, we see that the spread is 1 cent. So we have the the bid at 12.16 and the ask at 12.17. It's a 1 cent spread. That's more of a visual way to look at it. Now, do you need to look at that or know that or look at the charts this way to do this? No, this is just kind of getting into some more of the weeds, but I thought I'd mention it because that's kind of an explanation for the bid and the ask. But now back to order types. So essentially, if I was to do this right now, I'm going to get filled pretty much at the exact price Robinhood is showing on the screen, maybe 1 cent higher, because it's a limit order and you're probably going to get filled fast. Now, if they tell you that they're going to fill you at the limit price or better, either way, you're going to get filled roughly around where it's currently trading at. I would even say probably at the exact price that it's currently trading at on the screen. So that's a market order. You don't have to wait. It's going to fill you pretty much instantaneously. Now, if I go down to a limit order, which is the next option, I get to set the price that I am willing to pay. So if I was to go in here and set a limit price of, let's say, $12.10, that's me telling Robinhood, hey, I want to buy 1 share, for example, of SoFi, but I don't want to buy it until it is $12.10 or less when I am buying. It's the opposite when selling. I'll explain that in a second when I go through that process here. So this is a way to know exactly the price you're going to get filled at versus setting or placing a market order and having to deal with maybe a little bit of a spread and getting filled maybe a cent or two higher or a little bit higher than you thought. Not a huge deal, especially for an investor. But if you're a trader, it does matter. It certainly does. It could matter, I should say. It could matter depending upon the time frames and your style of trading. Every cent could matter. That could be the difference in, over the course of many, many trades, many, many weeks and months. That could be the difference of, a percent or two in your portfolio returns, which is kind of a big deal, especially the more money you have, right? So it matters. Now, this would mean that I can go ahead and set this. Now, let's say that I click on review. Now, it's not going to enter it right away. Click on review. It's now going to tell me you are placing a good for day limit order to buy 1 share of SoFi. Your pending order, if executed, will execute at $12.10 or better per share. Then it goes and gives me the current bid and ask price based off the last refreshment, which is cool. So that's before I even click buy. I can then go back into edit and then edit that from there. Pretty cool. So you're guaranteeing that price or better. When you're buying, better means lower. When you're selling, better means higher on a limit order. Okay. So they're going to give you the estimated cost. You're good to go. Now, I should also mention while we're here, trading hours. I'll talk about this once, and then I'll go through the rest of the orders so you kind of can see what I'm talking about here. But market hours, meaning 9:30 a.m. Eastern time to 4 p.m. That's what it says. But I'm not sure if it corrects for time zones. If you're on a different time, like I'm on the Eastern time zone, so that's what it tells me. I wonder if you're on the Central time zone, or if you're on Mountain time, or if you're on West Coast, what happens? Let me know in the comment section if you're watching this video. Does Robinhood correct when you click on the trading hours on your order entry? If you are not in the Eastern time zone, does it automatically tell you that, or does it still have 9:30 a.m. to 4 p.m.? If it does, I wonder if it has an EST or an Eastern indication on there. I'm curious. Next thing is extended hours and then 24 hours. So some stocks, I'll mention this now, some stocks are available, or even ETFs are available on the new 24-hour market. So in the past, Robinhood would not allow you to trade. They actually, if you go back long enough, the pre-market hours were from 9 a.m. to 9:30 a.m. Eastern time. And then after hours, I believe, was maybe like a half hour or an hour after close. So from 4 to 4:30 or 5 max. If I'm not mistaken, it wasn't that long. Maybe it was a little bit later on the after hours. Either way, they changed that to kind of fit what a lot of other U.S. stockbrokers were doing, and they changed that to allow you to trade from 4 a.m. Eastern time all the way to 8 p.m. Eastern time. Now, the time from 4 a.m. to 9:30 a.m. Eastern was pre-market, and the time from 4 p.m. Eastern all the way to 8 p.m. Eastern was after market hours. So there wasn't a lot of volume, but you could, in theory, trade there. Now they have the new 24-hour market, which goes essentially 24 hours a day, which is kind of crazy, except the weekends. So I think it cuts off at 8 p.m. Friday night, and then it opens back up at 8 p.m. Sunday night. So you can technically trade SoFi or certain stocks like SoFi. Usually it's the larger, bigger name stocks that have a lot of trading volume. And it will tell you what stocks are on the 24-hour market. Not all, but some are. Could this be useful? Yeah, because let's say that there's some crazy news overnight, like literally at 10 p.m., and you can't control what that news is going to be. Well, that might mean you want to buy or sell out of a position. It could be really good news for your position, or it could be really bad news, and you can minimize or even maximize your gains, minimize losses, maximize gains, potentially, by selling during the 24-hour market. Not a guarantee, but you could. And then extended hours is now kind of like their normal extended hours, trading from 7 a.m. to 8 p.m. Eastern time. That's kind of standard. What I would do personally is I would probably just select 24-hour market or extended hours if I'm setting a limit order on an investment style position where I'm like, hey, I want to buy SoFi at $12 or less, or $12.10. Now it's coming down, so it's getting closer to my original order. I want to buy at this price. I don't care what time of day it is. I don't care. Then just select 24-hour market. And at any time of day, night, morning, during market hours, if it gets that price, boom, you get filled and you buy SoFi at the price you wanted to buy. Same thing with the sell side. So I think it's worth mentioning that. It could be useful in the grand scheme. Not a huge deal for most people, but you should know it. Then when you go to the next section, which is expires, you can have it expire today at 4 p.m. or good till canceled. Now, good till canceled is technically not really good till canceled, because good till canceled orders on Robinhood actually cancel after 90 days. So you only have, they tell you the date. So June 15th will be the date. That's 90 days from when I'm making this video, but it's technically not good till they cancel. It's 90 days later. But if you're not sure if that order is going to fill today, tomorrow, or even this week, set it to good till cancel. And if you're okay with that and you're just monitoring it, not a big deal. And if it fills in 2 weeks, 3 weeks, great. You don't have to worry about it. You've already made the order. You don't have to come back and do it. It just kind of is a way to almost automate it, save you some time. Okay, so let me go ahead and enter this order right now. Actually, we are going to get filled, it looks like, or we're very close to getting filled. So I click on the order. It's now placed. I have it set for 12:10. We'll see. I could click on done, and then I can kind of walk away, or I could kind of wait on this page. If I wait on this page and it does fill, it will then say, I believe, order filled or something along those lines, and it'll just refresh automatically. So I'll give it a second and see what happens here. Boom, it now says SoFi purchase. So it tells me that it was purchased, 1 share, and the average price and my total cost. Now I'll click on done, and I'll come back to this page. What I will now unlock is the sell SoFi button right here. So now I can go ahead and do the exact same things and see the exact same orders, or I guess everything except one order, which I'll explain in a second, and I can have that on the sell side. So let me go over the example with a limit order now on the sell side. So if I click on sell order, if I leave it there, it'll be an automatic. So if I click on sell one share, it'll just sell me right now at the market price, or the best price that they can get me. If I click on limit order, I can now set a price. For example, let's go to 12.15. Nope, not 1215. 12.15 for one share. Trading hours, market hours, 4 p.m. I can adjust that if I want to. Click on review and click on sell. I'm going to leave it for now, but if I clicked on sell, that order will sit there. And if we get to 12.15 before the end of the day, because I set it to market hours and 4 p.m. today, then great, it'll fill. If it doesn't, the order will cancel at the end of the day at 4 p.m. And then I'll have to come back tomorrow and reset my order if I still want to sell SoFi. Okay, so that's cool. Let's go back in here, click on buy again. So let's go down to the next order, the stop loss order, stop limit order, trailing stop, and recurring investment. These are the next ones on the list. So now that I have a position, if I go to stop loss order, technically speaking, you can enter this on the buy side. Now, the reason why I say technically is because it's called a stop order. You may have heard it as a stop order on other platforms, but you could technically do this. And what I mean by that is, for example, all you do is you enter a stop price. So if I'm buying, the stop price actually has to be higher than the current price. If I go ahead with this, now that SoFi has gone red, it's now below that level. Watch what it will say. You are placing a good 4-day stop order to buy one share of SoFi. When the price of SoFi reaches 12.15, your order will be converted to a market order, and immediately you'll be filled. That's what a stop loss order means. Technically, it's a stop order, or at least if you're more advanced, you'll probably know of it as called a stop order, but that's the same thing here on Robinhood. So you could actually use a stop loss order to buy your SoFi or your shares if you wanted to. Okay, let me go back out of this and edit. The reason why I mentioned that first is because most of us are traditionally more accustomed to going on the sell side with a stop loss order. So now I can set my stop loss order to, let's say, $12. And what this is going to mean, for example, if I click on review, what's going to happen is this. When SoFi reaches $12, your order will be converted to a market order, and it will sell my SoFi if it gets down to $12. That's what a traditional stop loss is. Usually you put it below, like you're in a position and you're making sure like it stays above a certain price. If it goes below that price, you want to either manage your risk in a way where you have to sell it because you got to set your cash up somehow, or you lost too much in the position, or whatever. You just don't want to hold it anymore. And so that's what everyone's traditionally, or most people are traditionally aware of with a stop loss order. But I just want you to be aware that you can use that on the buy side if you're like, hey, I like this stock, but based off my analysis, I don't want to buy it in this range. If it breaks out of this range, I actually want to buy it. Let me get in. And I'll set a stop loss order to the buy side for above this certain price. Now, the same exact thing, or this very similar order, is the stop limit order, but there's a slight twist. So if I was to go and buy SoFi, most of us are probably more accustomed to this again on the buy side, I would think, although maybe not. Stop limit order means I set my stop price if I'm buying. It has to be above the current price. So let's go back to that 12.15, okay? Now, what's going to happen is when that price is reached, that's the trigger. That's going to tell Robinhood, hey, we hit this number. Now what? Based on if it's a stop loss order or now it's a stop limit order, what's going to happen is instead of automatically filling at the market price like a stop loss order would do, this is now going to refer to the limit price that you have to set ahead of time. So now I could say, hey, actually, I want to get filled a little bit lower. I want to get filled at 12.14. So if we hit 12.15, cool. But then if we retrace a little bit, I actually want to get filled 1 cent below if I could. Now, you may not. It might blow through the level and you may never get filled. It's possible. But I can go ahead and do this. And now when I click on review, watch what it says. You are placing a good for day stop limit order to buy one share of SoFi. When the price of SoFi reaches 12.15, your order will be converted to a limit order at 12.14 per share. You could also set this to be the exact same price. The point of this is that the stop order is triggering Robinhood to then Now take your limit order serious. It's like, I have a limit order. I want to buy at a limit price or at a specific price, but I only want to do so if this or number is triggered, if we hit this price first. So you can go higher, lower, but it's a way to kind of guarantee that you get a good fill. So some people will play on breakout stocks. A stock will break out over a level and then it might just go crazy. And, you might have, a stop order, a stop loss in Robinhood's case, and it might trigger. And then all of a sudden the stock is moving so fast that you might trigger way above the original trigger point. It's moving so fast that the bid-ask spread is huge for whatever reason, and so you fill it way higher. Now, this is essentially waiting for either a retrace or making sure you get filled at a price that you're okay with. If something was to break out and just run away, you don't get a bad fill, as they say, a bad fill. So that's what that kind of means. I thought I would mention that just so you're aware when using that. And the same thing on the sell side. So if I was to go with the stop limit order, I can go ahead and say, okay, well, $12 is my trigger. If SoFi drops below, hits 12, I want to get out of my position, but I want to get out at, for example, 12.01, and I think that would be a better fill. I don't want to get filled underneath 12. And it may not. It could trigger and just go straight down and never come back, and you might not get filled. But if it hits your level, it bounces back a little bit, and you get filled at a better price, and you're happy. Potentially. So that's kind of how that works on the stop limit side. Now, for a trailing stop, this one we're much more familiar with, I think. If we have a share of SoFi in this situation, we can actually trail our position. So if I am in and I have an average cost of 12.10 on SoFi, I go to the sell tab, trailing stop order, I can now trail by either a dollar amount or a percentage. So I personally would like to trail by a percentage. That's just kind of how my brain works, but maybe you like dollar amounts. And what I'm going to do is I'm going to say, okay, I'm going to trail SoFi by 5%. So if we drop 5%, then I am going to get triggered out. But if SoFi never has a 5% drop from the direction it's currently moving, then we're fine. So here's how Robinhood explains this. You are placing a good for day trailing stop order to sell one share of SoFi. If the price of SoFi falls from its highest price by 5%, your order will be converted to a market order and you will be sold. It'll sell for you automatically. It gives you the bid, the ask, and then the last sale price. If I'm not mistaken, they are going to take from when you select this order, the last sale price, okay, that they have right here. Then if we drop 5% from that price, you're out. So on a stock that's volatile like SoFi, I actually might want to go higher than that. I might want to go like 15% or I might want to go 10% because it can be pretty volatile. But for example, if I go 15%, it's kind of the same thing. If I click on review order, go to here. So if I go ahead and click actually the refresh button down here, it'll actually refresh this last sale price and give me the most up-to-date price that it will then be assessing the 15% from when I click on sell. So that's how that works. You just have to be aware of the current last sale price for when you're placing the order, and that is the 15% trailing stop you'll have to deal with. Or if I went with a dollar amount, I could set this to $1 and say, okay, if SoFi doesn't fall by $1, I'm good, but inevitably it probably will. Like it'll go up at some point and then it will come back down. Now let's say it goes straight up from here and SoFi goes to $13, $14, and $15 without having any big pullbacks down about $1. Now it gets to 15, and then we have a big market correction or a market pullback, and SoFi drops down to $13.95. Well, that's now a drop of over $1. You will now get stopped out from the highest point that SoFi was before it dropped $1. Or in the case of a percentage, before it dropped the percentage that you needed it to drop for you to get stopped out. That's how that works. Last but not least, going back to the buy side, I can click on recurring investment. You can't do this on a sell side, but you can do this on the buy side. Kind of makes sense. I could set a recurring investment on Robinhood. It's another type of order. I guess it's like a market order, but here's how it goes. You can set the amount. So if I wanted to deposit or recurringly invest $50 on SoFi, cool, I set my number. I could start it on any date that I would like. And then here's where it gets more interesting. Frequency. Every market day. Monday to Friday. So every day the market's open, you can buy. You can have it to every week, every 2 weeks, or every month, which is kind of cool. So if I set this to every month, I can adjust this and it'll change this to now the 26th, whatever I start with. So If I start this on the 18th, as an example, it's going to buy SoFi $50 worth of SoFi every month on the 18th. Now for payment, it says I have it set to buying power. So as of right now, I only have $13.30 of buying power. Make sure you know you're going to have buying power. So a way to go about this would be set up an automatic deposit on Robinhood where you just have money coming out of your checking account or savings account, I guess, into Robinhood every single week or month. And so you know you're going to always have a certain amount of cash. And then if you go to buying power, it'll just use your buying power or your cash to continue to buy the $50 of SoFi. Backup would be if you run out of buying power, it could refer to your checking account or savings account. Be careful with this because if you, again, set this number too high and now you run out of buying power and you don't have a lot of cash in your checking account, just be aware, like, this is where they're going to pull from. So just make sure you're setting this up ahead of time with numbers you know you can afford and you know that will always be there, or you'll have to come back and edit this order at some point in the future. So there you have it. That is a video diving deeper into Robinhood order types. If you are looking for a video diving deeper into the new Robinhood Legend platform, that'll be up on the screen right now. Thanks so much for watching. Hit the subscribe button, hit the like button. I'll see you guys in the next video. Peace.